All right, so let's jump right into this. You know, tariffs always seem to be back in the news these days, and we're looking at this Motley Fool article that says the utility sector could actually be a good bet.
Hmm. Interesting.
Yeah, they're pointing to the Vanguard Utilities ETF as a potential play.
Yeah, it is interesting how these tariffs end up, creating some unexpected winners and losers in the market.
Yeah.
Sometimes the sectors you think would be the hardest hit end up doing pretty well, and then the ones you think would just sail right through,
Right.
get caught in the crossfire.
Yeah. So just to kind of set the stage, I mean, tariffs are definitely back in the headlines. President Trump, he's put tariffs on goods from China, Canada, Mexico, and
Right.
and Europe might be next.
Right.
The Motley Fool article cites the Tax Foundation and says all these tariffs could push the average tax on U.S. imports to like 13.8%,
Wow.
which they say is a level we haven't seen since 1939.
Yeah, that's
So that's a big deal.
yeah, that's got to have investors a little,
Oh, absolutely.
on edge. The Motley Fool points out that the S&P 500 is already down 6% from its recent high, and then the Nasdaq Composite, which is really tech heavy, has taken an even bigger hit. It's down 9%.
Oh, wow.
So yeah, there's definitely a sense of caution in the air right now.
Yeah. But here's where things get interesting.
Okay.
The Motley Fool is making the case that the utilities sector might not only be insulated from all these tariffs, but could actually benefit,
Okay.
which seems counterintuitive.
Yeah, it does on the surface.
Right.
But when you really look at where these utility companies generate their revenue, it starts to make a little bit more sense.
Okay.
Unlike a lot of other sectors, utilities get most of their money, domestically, less than
Yeah.
1% from international markets.
Right.
So you compare that to like the tech sector, 56% of the revenue comes from overseas or real estate at 18%.
Wow.
It makes them a lot less vulnerable to global trade disruptions.
Okay, so tariffs could actually be good news for utility companies.
They could be, yeah. Potentially, JP Morgan Chase strategists actually think that the tariffs could boost the utilities sector. Because
Yeah.
think about it,
Okay.
if tariffs make imported goods more expensive, there's a good chance that U.S. companies will ramp up their production here in the U.S. to fill that gap.
Right.
And all that increased manufacturing activity that's going to require more electricity, more gas, more water, all things that utility companies provide.
Yeah, it's all got to come from somewhere.
Exactly.
And then there's the impact of the tariffs on the U.S. dollar.
Right.
The Motley Fool said that tariffs could actually strengthen the dollar.
Yeah, they did. They said theoretically tariffs can strengthen the dollar by reducing demand for foreign imports,
Okay.
which then reduces the need for foreign currency.
Right.
And, that can create a bit of a headwind for companies that do a lot of business overseas.
Right, because their earnings in other countries are worth less when they bring them back here.
Right.
Exactly. Their earnings are worth less when they're converted back into dollars, but again, utilities with their, minimal international revenue, they largely sidestep that.
So it's like they're in a sweet spot.
Kind of, yeah. They're not immune to broader economic shifts, but it seems like they're well positioned to kind of ride out this particular storm.
Yeah, and the Motley Fool recommends a specific way to play this, the Vanguard Utilities ETF, the VPU.
Right.
What exactly is that?
So basically, it's like a basket of stocks from 69 different U.S. utility companies.
Okay.
So it gives you broad exposure to the sector without having to pick individual stocks.
Okay.
And it's heavily weighted towards, the big players, with electric utilities making up 61% of the fund, and then multi-utilities another 25%.
Oh, wow.
Yeah, so the top holdings are like a who's who of established utility giants. You got Nexter Energy, Constellation Energy, Southern Company, Duke Energy,
Okay.
Vistra.
Okay.
So if you're bullish on the sector, BPU offers a pretty straightforward way to kind of get in on the action. Okay, cool. And the Motley Fool article also brought up this other kind of interesting angle, the rise of artificial intelligence.
Oh, yeah.
They're arguing that AI could actually be a major tailwind for utilities, which seems like a bit of a leap at first.
It does, but the logic is there.
Yeah.
I mean, just think about how much energy AI systems require. I mean, things like ChatGPT.
Right.
The article mentioned that it uses 10 times more electricity per query than a standard internet search.
Really?
Yeah.
So as AI becomes more prevalent, we're going to need a whole lot more power to run all these systems.
More juice.
Yeah. Probably not so good for my electric bill, though.
Probably not.
Yeah.
No.
Yeah.
But it's not just like a small increase we're talking about.
Right.
Goldman Sachs is predicting that electricity demand could actually surge to levels that we haven't seen in over 2 decades.
Wow, that's a lot.
Yeah, it's a significant and sustained increase.
Wow, so we've got tariffs potentially driving up the demand for, production here in the U.S., which would help utilities.
Right.
And then on top of that, we've got this long-term trend of AI driving up electricity consumption.
Right.
It does seem like a pretty compelling case, but I'm just curious, how has the Vanguard Utilities ETF performed compared to, say, like the S&P 500?
That's a great question. So over the last 3 years, the VPU has returned 21%.
Okay.
Now that is less than the S&P 500's return over the same period, which was 40%. So it has lagged behind the broader market, in recent times.
Interesting. You'd think with all this potential, it would have at least, kept pace.
You would think so, right?
Mm.
The Motley Fool article didn't really get into why.
Yeah.
But it does argue that with the potential impact of tariffs and this looming surge in AI-driven electricity demand,
Right.
the utility sector could be, poised for a period of outperformance going forward.
Okay.
It's definitely something to keep an eye on. What do you think? Does that make sense to you?
Yeah, it does. It does make you wonder, though, if there might be even better ways to capitalize on this, potential upswing in utilities and just going with the VPU.
That's a smart question.
Yeah.
And you know what? That's a perfect segue into the next part of our deep dive, where we're going to explore some other investment vehicles beyond just ETFs that might be worth considering.
Okay, cool. I'm excited to hear more about that.
Yeah, so stay tuned.
Okay, so we've established that the utility sector, it might be poised for some growth, but you got me thinking, the Motley Fool article, it only focused on that one ETF, the Vanguard Utilities ETF.
Right.
Are there other ways to play this besides ETFs?
Oh, absolutely.
Yeah.
If you're looking for more targeted exposure or maybe a little bit more risk and reward, you could look into individual utility stocks.
Okay, so instead of buying a basket of stocks through the ETF, you'd actually be like handpicking the companies that you think are the best.
Exactly. Remember those big utility companies we were talking about before, like Nexera Energy, Duke Energy, Southern Company?
Mm-hmm.
You actually research those individually, analyze their financials, and see their specific exposure to things like these tariffs and AI, and then invest directly in the ones you think have the most potential.
So it's more work, but potentially, higher rewards if you pick the right ones.
That's the trade-off.
Yeah.
Individual stocks give you more control over your portfolio and, the potential for bigger gains, but it also comes with more risk.
Yeah.
You're not spreading your bets across, a whole sector like you would with an ETF.
Right. That makes sense. What about mutual funds? Would those be worth considering?
Definitely.
Yeah.
If you're looking for something that's a little bit more diversified than individual stocks, but you still want, more targeted exposure than like a broad sector ETF,
right,
then a mutual fund that focuses specifically on utilities could be a good option.
Yeah.
There are some key differences between mutual funds and ETFs, though.
Okay. Fill me in.
So mutual funds, they're typically actively managed, meaning there's like a fund manager making decisions about which stocks to buy and sell.
Okay.
ETFs, on the other hand, are usually passively managed. They basically track a specific index or a basket of assets without a whole lot of human intervention.
So with a mutual fund, you're basically relying on the expertise of that fund manager
Yeah.
to make the smart choices, and the ETF is more just kind of following a set strategy.
That's a great way to put it.
Yeah.
And because of that active management, mutual funds, they tend to have higher fees than ETFs.
Okay.
But the trade-off is that they can also potentially outperform ETFs, especially in, kind of niche or specialized areas like utilities.
So for someone who's really, interested in this utilities play, there might be a mutual fund out there that's specifically targeting those companies that are poised to benefit from, tariffs or AI or both.
Precisely. It's worth, doing a little research, seeing what's out there.
Okay.
Now, if you're feeling a little more adventurous, we could even think about some like alternative investments.
Oh, like what?
Well, have you ever thought about investing directly in like infrastructure projects?
Like actually like putting money into like building new power plants or upgrading the electric grid.
Exactly. As AI and domestic manufacturing drive up demand for electricity, the companies that build and maintain that infrastructure, they're going to be in high demand.
Right.
And there's actually a variety of ways to invest in this space, from private equity funds that specialize in infrastructure to publicly traded companies that are involved in, construction or engineering projects related to energy.
Interesting. So instead of just betting on the companies that would benefit from the increased demand, you'd be investing in like the actual infrastructure that makes that demand possible.
You're right. It's a way to play the theme from a different angle.
Yeah.
Of course, these types of investments, they can be more complex and less liquid than traditional stocks or funds.
Yeah.
So it's important to do your homework and understand the risks involved. But the potential upside could be, quite significant, especially if we're really on the cusp of, a major infrastructure boom here.
Yeah, that's pretty cool. Lots to think about there. Now, you mentioned bonds earlier. Aren't those typically considered more of a safe haven play than a growth opportunity?
Yeah, I mean, they're generally seen as lower risk.
Yeah.
But they can still offer, decent returns. And in the context of, these tariffs and AI, there might be some interesting bond plays worth considering.
Okay, I'm intrigued. Tell me more.
So remember how we talked about tariffs potentially strengthening the U.S. dollar?
Yes, and how that could be bad for companies that are, making a lot of money overseas because their earnings would translate to less U.S. dollars.
But a stronger dollar can actually be good for U.S. dollar-denominated bonds.
I'm not sure I follow.
So it's all about relative value. Mm-hmm. When the dollar strengthens, the value of those bonds goes up compared to other currencies.
Okay.
So if you're concerned about, currency fluctuations in this environment, investing in, U.S. Treasury bonds or other high-quality dollar-denominated bonds could be a way to hedge against that risk.
So it's a way to kind of protect your portfolio from the potential downsides of a trade war while still getting a decent return.
Yeah.
I like it. What about bonds that are specifically related to, like, the utility sector?
No, you're thinking like an investor. Utility companies often issue bonds to raise capital for things like, building new power plants or upgrading their infrastructure.
Okay.
And those bonds, they get offered pretty attractive yields, especially if investors are confident about, the long-term growth prospects of the sector.
Okay, so we've gone from ETFs to individual stocks, mutual funds, infrastructure projects, and now even bonds. That's a pretty diverse set of options.
Yeah, we've covered, the major bases, but there's even more specialized, investment vehicles out there.
Really?
For instance, there are things called master limited partnerships, or MLPs, that focus specifically on energy infrastructure.
Wow.
And then real estate investment trusts, or REITs, that own and operate properties in the utility space.
Yeah.
It really depends on, how deep you want to go.
Wow. So many possibilities.
Right.
So how do you decide which path to take?
That's where it gets personal.
Yeah.
It really comes down to your individual circumstances.
Mm-hmm.
Your financial goals, your risk tolerance, your investment time frame, even how much time and energy you're willing to put into research.
Mm-hmm.
There's no one-size-fits-all answer.
It sounds like there are a lot of options, and a lot of them have varying levels of risk. What would you say is the most important thing to keep in mind?
I think the key is to remember that, we're not just talking about, these abstract market trends here. We're talking about your money, your financial future. So before you jump into any of these investment vehicles, take the time to do your research, understand the risks, the potential rewards, and make sure it aligns with, your overall investment strategy.
Yeah, solid advice. So we've talked a lot about different ways to, potentially capitalize on this tariff situation, the growing demand for electricity. But let's zoom out for a second and look at, like, the bigger picture.
You're right. Investment decisions, they shouldn't be made in a vacuum. It's like you're trying to navigate a maze. If you only focus on the path right in front of you, you might miss the bigger picture and end up just going in circles.
What are some of those, like, broader economic implications we need to be aware of?
That's a great question. And that's actually what we're going to be diving into in the next part of our deep dive.
Okay.
We're going to explore, the potential ripple effects of these tariffs, both positive and negative. Yeah. And how they might play out in the, utilities landscape and beyond.
Okay, I'm looking forward to it.
Yeah. So stay tuned.
Okay, so we've looked at, all sorts of investment options, tied to this whole tariff situation and the, growing demand for electricity. But before we wrap up, I think it's important to take a step back and think about, the broader economic implications.
Yeah, I totally agree. It's easy to get caught up in the potential investment opportunities, but we got to remember that these decisions shouldn't be made in a vacuum.
Right, it's all connected. So what are some of those potential ripple effects of these tariffs, like the positive and the negative?
Well, on the plus side, tariffs could lead to more stuff being made here, more domestic manufacturing. The Motley Fool article highlighted that if imported goods get more expensive, U.S. companies might just, ramp up production and fill that gap.
Which would be good for jobs and, economic growth here.
Exactly.
Yeah.
But of course, there's two sides to every coin.
Right. Tariffs make things more expensive, for us.
For consumers, right?
Yeah. Which could lead to inflation.
That's a big concern.
Hmm.
And if people have less money, because they're spending more on, everyday stuff,
Right.
they'll have less to invest,
Right.
which could end up slowing down economic growth.
So it's this balancing act, trying to help domestic production without, triggering a ton of inflation
Right.
or hurting consumer spending.
And then there's always the chance that other countries retaliate.
Oh, right.
If they put their own tariffs on U.S. goods,
Yeah.
that could hurt American businesses that rely on exports.
Yeah, that could easily turn into like a back and forth, trade war.
Yeah, tit for tat.
Yeah, where everybody just keeps raising tariffs and then nothing gets traded.
And global trade just grinds to a halt.
Yeah. I remember reading about the Smoot-Hawley Tariff Act back in the 1930s, and some economists think that actually made the Great Depression worse.
It's a cautionary tale, for
Okay.
sure. It shows how connected the global economy is and how, things can have unintended consequences.
So yeah, it seems like, navigating this whole thing requires, weighing those benefits and risks.
Absolutely.
Yeah.
It's about understanding the nuances and the potential, both the good and the bad. It's not just about picking the right stocks or ETFs. It's about understanding what shapes the market and the economy as a whole.
So how do you think all of this might specifically impact the utilities sector?
Well, we talked earlier about how, most utility companies are focused domestically, and that could be a big advantage. They're less exposed to global trade and currency stuff.
Right.
But it's not a sure thing.
Right, because even if tariffs boost domestic manufacturing and there's a higher demand for electricity, if those tariffs lead to inflation and the economy slows down, that could actually hurt demand for utilities.
Exactly. If businesses and consumers start tightening their belts,
Right.
it's all connected. Even sectors that seem to be in a good spot aren't immune to those bigger economic forces.
This has been a really interesting deep dive. I feel like we've covered so much
Yeah.
from, the specifics of different investment vehicles like the Vanguard Utilities ETF all the way to, tariffs and how they might impact the utilities sector. It feels like a lot to think about.
It is. And you've hit on a key point. It's not just about understanding those individual pieces. It's about seeing how they all fit together.
Absolutely. So as we wrap up here, is there one final thought or question you want to leave our listeners with, something to ponder as they kind of figure all this out?
We talked a lot about how AI is going to increase demand for electricity, but what does that mean for the infrastructure? Can the grid handle that kind of surge? And what about renewables, solar and wind? Can they grow fast enough to meet that demand? These are things investors need to be thinking about.
That's a great point. It's not just about the companies that, make and distribute electricity. It's about the entire system that supports it.
Right.
Everything from the materials needed to build solar panels and wind turbines to, the cybersecurity that protects the grid from attacks.
Exactly. The future of the utility sector is tied to the future of energy. And that future is going to be shaped by, tech advancements, geopolitics, environmental concerns, all of it.
So as we think about, how to invest, given these tariffs and all these other things going on, we have to keep an eye on the bigger picture. The energy landscape is changing fast, and, those who understand those changes will be the ones to benefit.
Well said. It's been great diving into this with you. Until next time, keep exploring, keep learning, and keep investing wisely.
And that's it for this deep dive. Thanks for joining us.